Hello again, everyone. My name is John Flynn with Flynn Real Estate, based out of the Niagara region, serving Southern Ontario. Here again to give you my professional and honest opinion regarding the 2022 Canadian housing market. So today I'm going to give you the rundown on the August stats for Vancouver, Calgary, Ontario, including Treb, and Halifax. Quebec didn't have their data in yet, so I'll give that to you next week. Starting with Vancouver. Vancouver gets the award for the hardest to read data, the most convoluted data. Anyway, I just find it so hard to read it or to get what I want, right? They have little to no averages, of course, HPI and indexes and all the rest of that. But anyway, I got to search through it. It's such a hassle. But anyway, let's get into it and see how Vancouver's doing, Greater Vancouver area. Sales are down 40.7% year over year. This is for Greater Vancouver area and all residential properties. 0.9% month over month. New listings are down 17.5% year over year and down 16% month over month. Now we'll see a trend with inventory. Inventory seems to be down in most areas. I don't know if it's because of the summer or we're seeing some resistance from the sellers, but yeah, we'll see in other areas. It's a very similar trend. Now into the average sale price. Detached is 0.5% year over year, so not much change year over year, which is interesting. And again, this seems to be a similar trend with the rest of Canada or with many other parts in Canada. Detached is down 2.3% month over month. And again, pay attention to that 2.3. We're going to revisit that in a bit. And 13% overall from the peak in February. Attached, 6.1% year over year, down 4.4% month over month, and down 13.3% from the February peak. And the apartments have done the best. I guess if you're a seller or owner in Vancouver, they're up 7.2% year over year, only down 0.5% month over month, and down 6.3% from the peak. So about half as much as the attached and detached. All right, now on to Calgary. Calgary's release starts with supply levels ease with fewer new listings in August. Again, fewer new listings, but we'll look at the inventory in a bit, total inventory, not just new ones. While sales have remained relatively strong, there continues to be a shift towards more affordable options as the year-over-year pullback in detached sales was nearly matched by gains for multifamily product types. So they seem to be shifting out of the more expensive detached and into the less expensive multifamily or condominiums and townhouses and whatnot. Now pay attention to this part. For the third month in a row, benchmark prices eased, declining to $531,800. While the reduction reflects shifting market conditions, it is important to note that previous gains are not lost. The prices remain over 11% higher than last year. So we got 11% higher prices than last year, guys, based on a benchmark price. Now I'm going to show you the reality when it comes to average prices. So over on the right here, that little red trend line, horizontal trend line I drew. August 2021 in Calgary, city of Calgary, the average price was $487,000. August 2022, a year later, $485,000. The statement says, don't worry, let's read it again, the last part. It is important to note that previous gains are not lost, and prices remain over 11% higher than last year. So I don't know if he's talking about the year total average for the whole year, but he's talking about the benchmark price year over year. And here's the average price. Month over month, prices are down 1.2% in Calgary. 11.3% they're down from February, and they're down almost 0.5% year over year, 0.4%. Cherry picking data to make it seem like the prices aren't down, but on a monthly average, they're down. Like you sell your house right now, it's going to be down. You're not looking at a benchmark running average of your house and you're going to get, $50,000 more than you would have. So again, don't like the wording in that. I wish they would use more averages instead of just the benchmark. Like use both, right? I'm not talking to cherry pick one over the other either, but let's talk about both of them. And you can see on the trend here, you can see the green is the averages, it's come way down. And the benchmark has reversed, but again, when you're comparing it to last year with those two arrows pointing down, of course it's higher, but it hasn't caught up. It's a lagging indicator. And of course, let's look at the inventory or supply issues that we talk about in Calgary. And you can see the green is the sales. So of course, inventory is down a little bit, but so are the sales. It's all relative, right? Like there's not as many houses on the market, but there's not as many people buying them. So inventory is not really an issue right now as much as sales would be if you're a seller. All right, on to TREB, Toronto Real Estate Board. Year over year, residential transactions or sales are down 34.2%, and they're up 11.1% from the previous month. So from July to August, they're up 11%. Average selling price in Toronto or TREB is $1,079,000, and it's 0.9% higher than it was year over year. So again, we're seeing this trend again here. Average prices very similar to a year ago. So prices have come back down to year-old levels now. And they're down 19.1% from February. When you look at the seasonally adjusted prices, they've actually come up 2.1% month over month. And TREB sales to listings. So you see total new listings very similar to a year ago in August. And the sales to new listing ratio, which is like the health of the market, of course, last year, 81%, big sellers market. This year, 53%, balance leaning more towards the buyer's market. And it's a 28% or negative 28% difference from the sales to new listings ratio. Days on market continues to rise year over year, 34 days this year compared to 21 last year. And listing days on market, year over year, 22 days now as opposed to 16 last year. So days on market is increasing. Okay, now for my board or surrounding all areas surrounding Toronto, minus a few. It's called. It's, again, all the areas. I've talked about it before. Most of Ontario, excluding Toronto and a couple other smaller areas. Number of homes for sale. Again, you can see we did lose some inventory in August, but overall it has increased. And we're still pre-pandemic levels. Days on market continues to climb. We're 28 or so days, still very low, but we're getting back up towards the more normal 40, 50, 60, depending on your city. The percentage of last list price, so what are homes selling for? Of course, they were selling for 120% at the peak in February. We're down to about 95.5% now. That is the lowest since 2016, December 2016. If you look back, that would be the last time that ratio has gone so low. Months of supply looks very like homes for sale. We're up at about 2.6 or so now. August showed a lack of inventory again. So of course you saw that just edge down, I guess, as Korea would say, it edged down. Nothing dramatic, but I'm guessing that's going to come back up in the fall. Number of sales are still very low. It's like winter months, lower sales, a little bit lower inventory, so it's all relative. And lastly, the average sales price. And you can see we did decline another 2.3% month over month. And again, I pointed that out, I think it was with Vancouver. 2.3% month over month. Keep that number in your head for a few minutes. 22.5% or 222,000 from the February peak we're down in Ontario. And we're up 1.2% year over year. Again, very similar trend. We're back to pricing from a year ago. We've reached the 2021 August levels. And you can see the little blue line on the side. I just drew my own continuation. I think maybe we're going to see a little resistance from sellers. Prices aren't going to plummet as fast as they have been. I don't think they will, regardless of what happens in the market. But I think we might do a couple of months of very little losses and then continue down once the winter hits. But let me know what you think in the comments. I don't think it's going up. I think it's going to continue going down. So this is a 10-year average sales price chart from Ontario, excluding GTA and a few other smaller areas. And I wanted to point out back to our month over month declines. So Ontario had a 2.3% month over month decline. Vancouver, Greater Vancouver had a 2.3% month over month decline, and I think Calgary had a 1.2, but they don't seem like big declines compared to what we've just seen. But I want to put it in perspective. If you look at 2018, our average prices in Ontario went up 2.3% for a whole year. So going down 2.3% in a month is pretty significant. It doesn't look like it when we're looking at the graphs and after we've seen such big price moves, but I wanted to put it into perspective. And we've seen many 5% months on the decline and the incline. And again, seeing it yearly, we've seen many years with 5% increases for a whole year. So we're seeing monthly shifts still like we've seen in yearly in the previous charts. Okay, and lastly, Halifax, brought to us by Andrew Perkins. Don't know him, never talked to him. I use his data or his blog every month almost now. So thanks to you, Andrew, for providing this. Now, Halifax still seems to be moving along pretty good. I don't think they've got the memo yet out there, but be careful, buyers out there. There's, some pain in the prices to come for the sellers. Just as Jerome Powell said in the States, we're going to see some pain, and they haven't seen it yet. They're starting to, but they're like months behind us. Like, it looks like they're about 5 months behind us. With a total of 752 active listings and 710 sales last month, we still are much in a seller's market. The summer slowed down the multiple bidding wars and largely over asking sale prices we have seen the past year. However, in the past weeks, we have noticed this beginning again. The number of sales in comparison to this time last year has decreased in both single-family homes and condos, and prices have increased. This shows that the market still remains competitive for buyers. I don't know if you guys are coming from Ontario. I know a lot of people are moving from Ontario east and west. They sell their house, they go out there. But let's look at the numbers here. So single-family average price, and you can see we've come down, or I should say they've come down significantly from like 600,000 to 550. So that's like a 10%, almost 10% drop just in a month. And condo prices have been declining for a few months there, and they're down over $100,000. It's like over 20% they're down. So their market is obviously, they have fewer sales. The summer's been good. Summer's been good everywhere. After we've gone through such a decline and a slump in sales and prices, that was a good month. And the good month was, prices are down further, sales are down, and some of the listings are down. I guess that's good for the sellers. Throughout Canada, what we're seeing is further declines happening, fewer sales happening. The inventory is declining a bit. So again, I think it comes back to the resistance from the sellers, and of course the buyers were jumping in. They're like we just saw these big declines. And also throughout the country, you can see prices have returned to the one-year lows from August last year, and it's almost every city that we looked at today. This week we have the Bank of Canada interest rate announcement. Let me know in the comments what you guys think is going to happen. It seems like it's going to be 50 or 75 basis points, but we won't know until we know. It's going to be interesting, especially after what happened in the States with Jerome Powell talking about the pain at the one meeting. I forget what it was called on the Friday, but it doesn't seem like they're going to pivot anytime soon. Again, I read all your comments, so let me know what you think in the comments. And until next week, I'll see you then.